Welcome to the first edition of Finweek Money Matters for 2015. I'm Dumisho Greater. In today's show, we take a look at Keepod. Now, that's a product that gives each user their own Android personal computer on a simple USB at a cost of about 80 Rand. We also look at the oil price. We have been talking about that for the past couple of months. And then we take a closer look at gold fields and hear some experts' opinion on how to reduce your household's reliance on Eskom. But before we delve into that, please do remember that you can send us your comments or feedback to moneymatters@abn360.com. But next up, let's take a look at the trend of the week. An estimated 70% of the global population do not have access to a computer in South Africa. Now, only about 1 in 5 people, or about 20%, have access. This is according to the World Wide Works. Now, 2 tech entrepreneurs that are based in Israel developed a simple USB known as a Keepod to address this issue. In studio with me to discuss this technology is Shandukani Mulaudzi. She's a journalist at Finweek. Thank you so much for joining us. Shandukani, how does this work? I mean, I understand that just having a USB, this is the future. So does this mean in that USB, it's equivalent to my PC?
Yeah, basically what it is it's a USB stick that has an operating system on it. So basically it's a computer in your pocket. So you plug your Keepod into any computer and it comes up as your own desktop. You can go into your own apps, you can go into everything that basically belongs to you as it would on your own personal computer. And your information doesn't stay on the computer that you're using, so it's yours, it's personal, it's private, everything.
But you still need to be able to plug it into a computer now in an age where we are still living with this big digital divide and not everybody has a computer. Doesn't this defeat the purpose? Yeah.
So what Keepod is trying to do is that they're trying to make sure that you are able to use the Keepod on any computer, no matter how old it is. So what they're doing is they're refurbishing old computers, laptops, whatever, and they take out the hard drive as well as the hardware as well as the software. And then you can use that and you can plug it into that computer. So they're trying to get people to recycle computers, basically.
Is this being rolled out across the African continent too? Because it's not just South Africa that's got a digital divide. It's probably even more pronounced in the rest of the African continent.
Yeah. So what Keepod has done is that they started with a project in Kenya, and they've moved on to Uganda and I think a few more African countries as well. And basically what they need is NGOs and also people who are willing to do these projects on their own. And basically you just go onto their website and you apply as an NGO and you say, hey, look, this is what I'm trying to do in terms of improving my community and the people that I am in immediate access to. And so they help you to raise the funds. They use a website called Indiegogo that raises funds for you. And they also ask you in terms of your needs, how many users are you trying to get to, how many computers would you need, that sort of thing. And then they help you to do all of that. They also help you to figure out how to, dismantle a computer, put it back together and all of that. They're really trying to equip everyone to be able to do that.
Has there been any data on success rate, how successful it's been, the rollout?
They weren't able to give me that when I asked for it, but I think in terms of their Kenyan project, I think that's their most successful one so far. They have 1,500 users, and they've been able to give them, I think, because what they do is they make these stations. They're called Keepod stations, and that's where they have, it's like a computer lab that anyone can come to in the community. And I think at that specific one, they have about 50 computers, and then those 1,500 users can all have access to that. I just think it makes sense in terms of the fact that, let's say we had a school in South Africa, which we do.
Yeah, I was getting
we have
to
a
that
lot
education.
of schools. Yeah, we have a lot of schools that don't have access to computers, and the worst thing is that they want to do that, and now they have to study computers theoretically, which doesn't make sense. It's like trying to teach someone science without an actual petri dish. It can't work, So I think in terms of sustainability, it could work in that you would need a lot less money to have a lab that works for a lot of students. Yeah.
Oh, interesting.
Yeah.
Are you going to be keeping an eye out on the story?
Yes,
okay,
no, definitely.
So in the next couple of months, hopefully we'll have an update and see how far we've come. Thank you so much.
Cool.
That was Shandukani. Up next, let's take a look at this week's cover story. Well, in studio with us is Finweek's editor, Jana Marais. She's here to discuss this week's cover story, which looks at the oil price and the impact it has on companies like Sasol and investors with exposure to African markets like Nigeria. Jana, Happy New Year. Good to see you again.
Hi,
This is, and I want to start by looking at OPEC, because we can't speak about oil without not looking at OPEC. This is clearly a very different stance that we are seeing. Back in the 80s, what they had done is when the oil price fell, they cut production. This week, the oil minister said, we're not doing that. So the question is, how low are we going to be seeing this oil price go?
Look, I think the oil market has just been fascinating, not only over the past few months, but really the past few years. I think the shale story in the US have been really shaking things up in that market. And I think Saudi's made it very clear that they're not going to make the same mistake that they made in the 80s. And I don't think, I don't know if everyone in OPEC is equally happy about their decision. I think countries like Venezuela and Nigeria, for example, they're really struggling because of the lower price. So it'll be an interesting space to watch. How low can it go? Well, if I knew the answer to that, I'll certainly not tell you. I'll be making my millions shorting it as we speak. So I don't know. I mean, we've seen, estimates going to $36 a barrel, and who knows? And I think, for me, the interesting thing will be to see at what point does it bottom out, and then how does it rebound? So it's certainly we're in for an interesting few weeks and months for sure.
I'm very concerned about countries like Nigeria who have such a huge reliance on oil, and exploration activity is now said to come to a halt. What are the prospects for countries like that with such a huge oil reliance and exposure?
Yeah, look, I think Nigeria's just had a terrible run of bad news. It's been the oil price, it's the economy, it's Boko Haram. And in the run-up to presidential elections, this is certainly not a great time for their politicians either. I think we actually have an interesting article in the magazine looking at how much less reliant African economies are becoming on commodities. And maybe the Nigerians are not feeling that quite yet, but their oil production has actually been steadily decreasing over some time. And certainly the economy is hurting, but perhaps not as much as it would have a couple of years back. I think they are diversifying, but certainly there's not much good news in the Nigerian economy at this point.
Well, good news for us definitely is that we are paying less at the petrol pump. That was Jana Marais. Is going to stay with us for the debate coming up in the second half. But right now, commodities have been having a torrid time. But the Finweek contributor, that's Moxima Gama, believes Goldfields could be one of its primary bear trend. After 3 years of downside for the share, this must be good news for investors. Time now for that punt of the week. Moxima, hi, Goldfields, that's on your mind. What's changed there? Looking at gold stocks, they've sort of been, one of those unloved shares over the past couple of years or so.
Right.
Your take on this is a bit different.
Look, I'm starting to warm up quite a lot to it. I mean, as you said, it's 3 years, and gold shares were not something I would ever, recommend for a portfolio. But Goldfields seems to be making a bit of a standout. Look, a lot of them, including Harmony, has actually broken out of their bear trends. But I'm talking about Goldfields in particular because it's outperforming its peers. So having to break out of a 3-year bear trend is quite a big deal. But I would halt a little because it needs to confirm, and in technical analysis you always have to confirm. So 66 Rand is the level, and at this point the RSI is a bit, it's actually extremely overbought.
I'm going to pause there because we do have the graph on screen, and I know that you're very good at this technical analysis. Right. So perhaps when we are looking at a graph like that and the movement of Goldfields share price, what are the key things to look at?
So firstly, it needs to get out of a consolidation zone, which seemingly it's been trading in for about a year, and above 66 is the time where it would actually just abandon that sideways movement and start the ascending phase of a huge bottoming out pattern. Now, when it's a bottoming out pattern, it means it could actually go to its prior highs, which at this point was about 127, but this is a long-term view. Breaking above 66 could gradually make it go to at least 96 Rand. The reason why it's probably such a hot stock at this point is because I think it's hurt a lot of people who always thought it was going to turn. and it's now hit levels that are pretty low. So although the fundamentals are not really compelling to say, I mean, they did release a very good results in August, and they've kind of sorted out this whole thing with their South Deep. When news flow is, when investors start reacting to any type of news flow, we should know it's sentiment driven. And it looks like sentiment in this case would prevail and push up our Goldfields. Look, there are certain risks in terms of, that's why I wouldn't sell my house and buy Goldfields, but I would nibble into it, and every resistance level breakout you'd want to then increase your holding. The risks are that South African input has declined quite a lot, from 70% or 80% in the 1970s to a 10 or 15%. So there's that risk, and then it's the trade unions they have to deal with. It's that's why I say you wouldn't. It's giving us. You could make. You're picking it up at a low, and it is showing a lot of upside potential. But you'd really want to take it slow above 66 and start increasing your position.
What about the gold price? This is one we've been watching. A number of things have happened over the past couple of days. The movement, or the surprise move by the Swiss bank, saying that when it comes to pegging the Swiss franc against the euro, those limits have been removed. We saw some safe haven sentiment driving the gold price up. Is this something that's likely to happen? All of this volatility that's playing out in global markets will be favorable for the gold price and therefore Goldfields. Is this is this something we can say yes to?
Yes. Look, gold is another sore spot. I mean, it's still within its bear trend, but it looks like it's picking up. In actual fact, I would have wanted it to trade above 1,255, let's say 1,003, and it's actually breached that level recently, which means there is some momentum picking up, and it's held quite a good support. So what was bearish is now starting to become neutral, potentially bullish. Effectively, gold has to trade above 1,650 to be out of that bear trend. But having to at least now start to tick back up are signs that there's upside momentum, and it seems like any positive news on gold could actually cause quite a spike. So those two going hand in hand, including the rand, this Goldfields, or at least Goldfields. I mean, the other gold stocks are also looking pretty good, but specifically Goldfields looks like it's going to start giving us a few smiles from years of gloom.
Yeah, something to smile about. Moxima, thanks so much. We'll be watching Goldfields as always. We do watch those gold stocks to see if they do gain back their luster. That was Shandukani Mulaudzi. She's our journalist at Finweek, and of course our Finweek contributor Moxima Gama. We're going to be heading into a short break, but when we come back, we take a look at what it will cost you to get rid of Eskom, and is it worth it? You want to stay tuned for that.